Call is getting recorded as per the SEBI compliance requirement. Welcome everyone to the Nuvama Management Connect series. Today we are hosting the management of Gulshan Polyols Ltd. Management is represented by Ms. Aditi Pasari, Joint MD, and Mr. Rajiv Gupta, CFO. The government has announced a paradigm shift to support the grain-based ethanol players with its commitment to ethanol blending program. And this is by reducing the FCI broken rice price from 28 rupees to 22 rupees. With this preface, I'll hand over the floor to Aditi Madam for a brief remark and followed by the Q&A. Over to you, ma'am.
Hello, everyone. This is Aditi Pasari, Joint Managing Director of Gulshan Polyols Ltd. I would like to thank everyone for taking interest in the company and giving time for this call. Last few quarters have been very challenging for the company after since we ventured into the ethanol segment. That is also mostly because ethanol itself being a very naive segment and very nascent, and some kind of policy formation which is constantly happening. But very fortunately, we feel we are on a U-turn recovery from here and the worst is behind us. The government in our favor has finally allowed the use of FCI rice to the ethanol industry at a subsidized rate of 22.50, which has had a very positive impact on the industry overall. Even the fact that raw material is available to us at a fixed price, at a subsidized rate, and where we will be able to have a comfortable margin. And in the same retrospect, we have also seen a softening of raw material prices available in the open market, whether it is in DFG rice or it is maize. There has been a softening of raw material all across, which will have a very positive impact on the EBITDA, on the profit margin. And we are looking forward to a U-turn recovery from here, and I'm hoping that the worst is behind us. I would love to take question and answer from the forum.
Yeah, we can open the floor for Q&A. If participants want to ask question, can unmute and go ahead with your question.
Hi Viraj, can I ask a question?
Yes, Anand, please go ahead.
Yeah, hi, good morning. Good morning, Aditi. I wanted to check what are the linkages between all the two businesses, mainly grain processing and the ethanol. Is the raw material similar and how they are linked to each other?
There is actually the major link between both the segments is the raw material. The raw material is common for both our segments, whether it is the grain processing or the ethanol segment. The raw material remains maize and rice. So that is the common factor. So after the ethanol industry, this ethanol segment, which came in purview in last 2 years, the entire raw material scenario got affected also for the grain processing segment. And there was the rise in prices of raw material also affected the grain processing segment. That is the common factor. In the process front, yes, there is some commonality in the process up to receiving grain to storage and to milling. So up to almost fermentation section, there is a commonality in the process in both the segments.
Okay, but if you get subsidy while procuring raw material for your ethanol plant, whether that can also be used in maize, or how government makes sure that you use only for ethanol?
Also, government runs a very, very transparent SAP scheme. So it is actually the orders which we receive for the government for supply of ethanol from FCI, it is all tender based. For example, if I have taken a tender of 1 crore liter of FCI rice in the whole year, so I will be getting a subsequent FCI rice in the ratio of 2.2 lakh metric ton. So this the OMCs will be issuing me a PO of 2.2 lakh metric ton. The ratio is 2.2 for FCI rice, which I have to submit to the FCI, and only the corresponding rice will be available to me, and I have to supply the corresponding ethanol to OMCs, for which they have given me the subsidized rice. So it is very, very streamlined, very organized. There is no way that this rice can be used for anything else.
Understood. So your procurement cost for both the segments is totally different.
A procurement cost is totally different. Well, when I buy from the open market, when I'm buying maize or DFG from the open market, then the prices are similar. We are buying, whether it is for making sorbitol or it is for making maize ethanol, I am buying maize at a similar price.
Okay. And ma'am, what is the current rate? How the rate has changed? Like government has reduced the prices to 22 rupees now. What was the earlier cost for you guys?
So, see, when the ethanol scheme was set up and conceived by the government, they had given us an option of FCI rice. That FCI rice will be available to ethanol industry at a subsidized rate of 21 rupees. And in fact, a lot of plants in the segment were set up on this assurance that FCI rice will be available at a fixed price. And if ever grain is not available in the open market at a viable cost, the industry will shift to FCI rice. However, this whole scheme got jeopardized in July 2023 when the government halted supply of FCI rice to the ethanol industry. And that is where the challenge started, because the entire industry, and I talk about my company industry as same, the company was dependent on buying raw material from the open market. And there was a lot of the demand and supply gap really increased, because of which the prices of raw material went up for both maize as well as rice.
Okay.
But however, now a few weeks back, the government has reopened FCI rice for the ethanol industry, which has already started softening the price of raw materials which is available in the open market. Like, for example, if I was buying in September, October, which was one of the very challenging months for the company and the industry, where we are waiting for the new crop to come in November, and everyone has to utilize the stocked up crop. The maize price went up as high as 26 to 27 rupees a kg. And after this news of FCI rice getting released for the ethanol industry, we are able to buy maize anywhere between 23.50 to 24.50. So that is the kind of impact we have seen. And you see, if I see that there is an impact of 2 rupees on the raw material, so that has a direct impact of 2 rupees into 2.6, which is the ratio in which the maize is used in ethanol. So which is almost a 5 rupees per liter impact on the EBITDA margin of maize ethanol. So that is the kind of impact we see with this news.
Understood. And one last question. Between this period when the government was not selling the broken rice from FCI, where it was getting sold from the government, not at subsidy rate, they were not selling. So what they were doing for that?
It was stocking up, yeah. They have more than 70 lakh metric tons stocked up since 1 year. And the FCI godowns are like overflowing with rice. And but I think it was just the election year and the food security that they were a little wary of ensuring that surplus food grain is available for the country. So that's why they were not able to release it for political reasons. So it was very much in the godowns, but then the godowns were overflowing with surplus rice.
Understood.
And the ethanol industry was constantly liaising with the government and asking them, requesting them to release this rice, because that has totally balanced out the entire ecosystem of the ethanol industry.
Understood. Thanks a lot.
Yeah, sure.
Participants wanting to ask question can unmute and go ahead.
Hi, Viraj. Can I ask
Yeah,
few questions?
hi.
Yeah, hi, Aditi. Recently, we have also, Gulshan has released that they have got a new order from OMC, right?
Yes.
So, if I see, so the prices, so what is cycle, what do you mean by cycle C1, C2, C3? And so the rates, the price per liter are different for all three. So, is there any different types of ethanol acquired here? How is it?
No, the end product is the same. The ethanol which we are supplying is the same. It has the same specification. There is no difference in the end product. But we have 3 pricing points in the grain ethanol segment. One is a 72 rupees, 71.86, which is when we produce ethanol from maize. Second pricing point is 64 rupees when we are producing ethanol from rice, damaged food grains. And third pricing point is 58.50 when we are producing ethanol from FCI rice. So these are three pricing points which the government has given us. So when we talk about C1, C2, C3, these are the tenders in which the government invites bids from ethanol industry. So the first tender is C1, of course, and that was for the entire year. That comes out in October for the entire ESY year, which is from 1st November to 30th October, 31st October. So that is where we have to apply for, we have to take allocation from the OMCs. We have to apply depending on our production capability. And that was the first tender was for about 910 crore liter, which the government has released. And in that, we had taken an allocation of about 15 crore liter. Yes, correct. Which is about 1,000 crores. Okay. And after that, there was a C2, C3. So C2 was open. The government keeps coming up with new tenders as it feels that the requirement is going up or it needs more and more. So it will keep coming up with new tenders, new cycles. So then the second tender came up in the first seat, which is called C2, which was where they invited bids for third and fourth quarter, like for August, September, October quarter. That is the time it asked for bids for the fourth quarter. And now it recently came up with another tender, C3, where they only, which was released after they allowed FCI rice to the ethanol industry, where they allowed bids from their industry for ethanol to supply ethanol from FCI rice. So that's how these three cycles have been released.
Okay. Okay.
But in the past 2-3 years, government can come up to 4 to 5 cycles, depending on the requirement.
Okay. So, what is the current price and what is the current price of maize and how do we expect it to move going forward? Because we are primarily maize dependent, right? Our main capacity is of maize ethanol, right? Maize-based ethanol.
Yes, I just answered that question that after there has been the FCI rices got released, this news of FCI rice getting released, there has already been a softening in the maize price and as well as the DFG price. I just answered that current prices are anywhere between 23.50 to 24.50.
Okay. And how do you expect them to move?
See, we are always very positive. We are hoping that it is just going to get better from here because right now it is only the tender which has got floated and allocations have come. But the moment the rice actually gets released to industry, which is going to be the next 1 to 2 weeks, then there will be further softening.
Okay. Okay. Understood. And just a couple of questions. So, see, in the business, we don't have the pricing power, or because the prices are dominated by the OMCs, and we don't have the purchasing power. So, would it be a good strategy that we are betting big on ethanol segment going ahead?
The challenge, every industry has its own challenges. So there is no business that comes without a challenge. And the challenge in this industry is that it is government regulated and it is the selling prices governed by the government. So for us, that is also the good news is that our revenue is secured. Like the moment we set up a plant, we're able to actually, in the first year, we're able to achieve, we can run on 60 to 70% capacity utilizations, get the turnovers very fast, which for any other business takes about 2 to 3 years to capture the market, to develop a market for yourself. So the positive thing about this segment is that you get the revenue, the turnover very fast. In the very first month, the orders are available to us. We have to just produce, get the efficiencies in operations and produce and sell. The buyer is available, buyer is ready. And you see, the government is already blending 16% of ethanol in petrol, that means it is already substituting 16% of its crude from a domestically produced product. So there is no way the government will reverse this policy. It will not go back to buying crude oil.
Okay, understood.
So we are very, very comfortable and very confident on the policy. That there is no government can touch this. They will not go back to reversing 16% blending and go and buy crude oil. And you see, the government is the direct beneficiary of this policy, whether it is from improving the balance of payments, decreasing imports, and you see, whatever the government remuneration government gives us, our raw material cost is more than 70%, which means 70% of that 72 rupees which the government is giving us is going directly to the farmer. It's agro raw material. And India is an agro economy. So it is directly going to the farmer and the payment is coming to them over the MSP within 10 to 15 days or even lesser.
Lower by 500 points.
So there are multiple things which have been actually leading together, for which we are very confident that this policy is here to stay and the government will support the industry, which it has been doing from the past 2 years. From time to time, each time there was an intervention required, it has intervened and supported the industry.
Okay, understood. And can you give just a couple of data points that what would be our RM cost and what would be the processing cost versus the realization? Or say, give just an example of maize-based ethanol, which is our major part, right?
Yeah, so see, I said that our yield is 2.6 in maize. So if we can, and it just of course it keeps changing with the volatility in raw material. Today, if I say I'm buying raw material at 24 rupees, so 24 put into 2.6, so 62.4 is the cost of raw material for me currently at current prices, right?
Right.
And then I have an added cost of 12 rupees, which includes power, salary, administration, chemicals, other cost, the conversion cost, another added 12 rupees. So if you just add 12 rupees to that, so we are getting a cost of almost 75 rupees, and the revenue is 72 rupees. Plus, we get an additional revenue from the byproducts about 6 rupees. So about 78 rupees is the revenue, out of which cost is about 74. So 3 to 4 rupees is, these are just ballpark figures you can do. I mean, depends again, it keeps depending on the volatility of raw material.
Okay,
But
understood.
these are the basic cost sheets for us.
Okay.
Yeah. So you can actually, depending on the prices, you can just do the backward calculation.
Sure.
Yeah.
Okay. Thank you. I'll join back in the queue. Thank you.
Yeah, sure. Thanks.
Yeah, hi. Hi, Aditi. Am I audible?
Yes, you are.
Yeah. So couple of questions. I'll take segment by segment. One, mineral processing, which is a steady segment, I see. We are doing, let's say, about 7-8% growth this year, 9 months, and probably the similar kind of a slightly higher EBIT growth. Do you see any risk to this segment, let's say, in the next coming 1 or 2 year in terms of, let's say, growth outlook or margins?
See, mineral processing is a stable segment for us. It is actually the first product for the company. The company started with calcium carbonate, and it is a 45-year-old product.
Okay.
Yes.
So I'm just on looking at is there any risk to the anything which we'd be aware on the risk side that probably next year? What I'm looking at, like say we'll do about 20 crore EBIT this year on the mineral processing segment. Should that number be about 10-15% higher next year? Is that a visibility what we have?
So there are two things over here. When we are doing regular business, so I'm not expecting any big jump in the revenue or the EBIT side because it is a stable business,
Okay.
But we have a model of on-site PCC plants where we set up a on-site satellite plant in the premises of a paper industry. We've already set up more than 10 such plants, and we've also got actually recorded in the Limca Guinness Book of Records for coming up with this concept and technology. So each time we set up, if we set up a new on-site plant, there is a boost in the revenue as well as EBITDA, because those are one-time contracts. Those are like EPCs where we are setting up a plant and handing it over. So then when that happens, there is a boost up in the EBIT levels as well as revenue. But if that is not happening, then it is going to be usual.
But just conclude on this, FY'25, there was no one-time boost, right? In FY'25?
No, we did not have any on-site which we commissioned.
Understood. I'll come into the main segment, let's say ethanol. What was the volume in this quarter? Kiloliter wise?
I don't have
Or let me come to the, let's say what order book we have. You mentioned about 15 crore liter, 1000
Yeah.
crore.
You can just
And
divide by 4 actually. So by 3.7, about 4 crore liter into 70. Yeah, that's right. About 4 crore liter. Yeah. But we had about 4.5 crore liter in this first quarter
okay,
for both the plants.
understood. So let's say my question is, let's say full year FY'26. Should we be looking at like what kind of volume and revenue for the ethanol segment?
So I'm looking at 20 to 22 crore liter.
Okay,
So it's 22 crore liter in the next financial year. So if
that will be about, let's say, 1300 to 1400 crore.
that will be 1500 crores actually.
Okay,
Because we
1500
also
crore.
have an added revenue from the byproduct.
Understood. And when I look at EBIT this quarter of about 10 crore, which is a 2.5%, now with the further price decrease on the ethanol as well, maize as well as rice, should we be looking at a higher EBIT per liter or as a
Yes,
percentage?
definitely. As I just mentioned in
Uh,
my previous in this call, that
hmm,
see each time the price drops by 2 rupees, there is direct impact of almost 5 rupees on the EBIT margin. And a
yeah,
5 rupees means about 4 to 5% on a 72 rupees, right?
correct.
Actually, more than that. So then, yeah, we definitely see that kind of improvement in EBIT margins.
So can we go back to 8-9% kind of a margins in
Well, we
this?
are very hopeful. We are very hopeful that something should come up. Yeah.
Just to conclude on that, so the FCA rice will come in this quarter. And the full benefit of maize price reduction also should come in this quarter, right? Quarter one.
Not full benefit, but maybe, yeah. But yeah, maybe like FCA rice is expected to be coming now in next 1 to 2 weeks. We are expecting the supplies to come in.
Okay.
Yeah. So definitely, yeah, by March, April.
And maize price is also falling during the quarter, right? Because
Yeah,
last we
it has
spoke in,
started softening. It has started softening since last few weeks.
so then the full, like last quarter was not the full benefit of lower maize prices, right?
No, last quarter we were experiencing high prices, high volatility. So
Ha.
I said, last few weeks only we are experiencing this. So the effect, we always already we have stocks of raw material for a few weeks.
Hmm.
So then I think by March we should start seeing the impact. So the full
Okay.
quarter will not see the impact of this, but yes, the corresponding quarter will see.
No,
The
the
real
quarter one of
impact of this,
FY'26.
yeah, real impact of this will start coming in March for us by next month.
Okay. What kind of maximum optimum production we can do in a year? So provided we have full raw material available as a liter wise.
See, we have capacities of 26 crore liter, which have been built up between both
Okay.
the plants.
Okay.
So, well, if I say at 80% capacity utilization is about 22 crore liter, 80 to 85% capacity utilization.
Which we are expecting this year itself, right?
Yes. So,
Okay.
yes,
So
we will definitely try to push this to 90% in the corresponding years.
understood.
Yeah.
Understood.
But the
Lastly,
maximum capacity is 26 crore liter for that existing capacity.
okay. Lastly, on grain processing, this quarter we see sharp swing in a profitability. Despite our revenue was lower, so 190 crore become 180 crore on revenue side, but still we swing from 2.7 crore EBIT loss to 2.6 crore profit, about 5 crore swing as more than 5 crore. Was it driven by higher prices or what is driven by the lower raw material cost?
See, quarter two, like the financial quarter two, is a very challenging quarter
Okay.
for the company, for the grain segment. And that has been always, always actually, because that is a time that the old crop is over, the rabi is over, and the kharif is about to come in November.
Okay.
So there is a lot of stocking which happens at the trader's end, and the raw material is available at a very, very high price. That is the time maize was available to us at 26, 27 rupees, which are obnoxious prices. And
Understood.
after that, when the crop came in November, so then the softening started happening, and that's where the profitability improved.
Okay. So obviously 9 months we are at loss. This quarter we are at about 1.5% EBIT level. Do you think we should go back to again 5-6% kind of EBIT level? And then let's say next 2 quarter. This quarter will improve and next quarter probably when full benefit of lower raw material visible, lower maize prices. Quarter one should be about 5 to 6% EBIT margin.
So I would not like to give a number here, but we are definitely, as I said, looking at some kind of recovery from here.
Okay. Because 10% raw material is a big number, right? On a cost side from 26-27 to 23.5 to 24.
Yes, it
10%.
is.
I
It is,
was
it
hoping
is a
that
big.
it can easily give 3-4% of additional delta on the margins.
We are hoping that there is going to be recovery.
Okay. Last on the balance sheet side, like what is the capex we are looking for, let's say for this year and next year also?
So there is no additional capex that we are looking at in this year.
Okay.
Yes, there's no additional capex.
And next year also should not be any material capex other than maintenance, right?
Yes, I will not, there's nothing that has been approved by the board, so I will not be able to give out any information on that.
Okay. What is the debt number? Net debt FY20 December end?
Yes, sure. Rajiv ji, who's with me, the CFO, would you like to take this?
Yeah. Net debt, you're talking about working capital or you're talking about the overall?
Total net debt.
Net debt is around 525 crore, which include WC as well as term loan.
Okay. And what would your maintenance capex, sir?
Maintenance capex is around 10 to 15 crores, generally for a year.
Okay. Understood. Thank you, sir. And all the best.
Thank you.
Yeah, Anand, go ahead with your question.
Yeah, hi. I wanted to check about what is the ratio of maize and rice in our raw material, ma'am?
For ethanol?
Yeah, for ethanol.
Well, currently the plants are running on about 80% maize and 20% rice.
Okay. Can rice proportion can increase?
Well, all depends on the price and availability of rice.
No, suppose FCI rice is available, so can you go into?
Yes, so now that FCI rice is available, we are taking high allocations on FCI rice going forward.
Okay. Can it be made because FCI rice would be lower than maize price? So can it be made 100% FCI rice?
All depends on the dynamics of raw material availability. But yeah, going forward with the FCI rice coming in, we will be taking higher allocations on FCI rice. But not 100%, because at times even mobilizing FCI rice has its own challenges. So for the plant to be 100% dependent on FCI rice is not something we want to have that kind of a bottleneck. So we would like to keep an option of multiple raw materials.
Okay, understood. And so before this restriction of government came for selling FCI rice, what was the ratio which we were operating at?
Yes, that is the time we were operating 80% maize and 20% rice.
So at that time also you were not at a higher allocation for rice, ma'am?
No, not at all, because rice was coming too expensive to us.
No. Prior to the restriction made by the government, prior to that, ma'am, when it was available from FCI rice was available.
July 23, you're talking?
Yeah, period before that.
So see, that is a period the plants were running mostly on rice.
Okay.
There was no option of running the plants on maize. In fact, in 2022-23, the plants were mostly running on rice as well as FCI rice. In fact, after the government halted supply of FCI rice to ethanol industry, that's where then we had to license with the government and make them shift to make maize available to the industry at a conducive price. And that is the time it gave two important price revisions in maize ethanol. One in November 23, another one in January 24. And I would like to also, inform everyone that my father, he is the chairperson of the Grain Ethanol Manufacturing Association, which he only founded in 2023 after the government halted FCI rice. And today we have more than 100 members. The entire ethanol industry is part of the association. And it has actually been my father's hard work and his licensing with the government that we got multiple increments in the maize ethanol price.
Okay, so realization of ethanol is different for rice and maize if it is processed to rice or maize?
Yes, the yields are different. From maize, it is at calculated 2.6 kg per liter, and at rice, it is 2.2.
Okay, so how it translate to, so if maize is also expensive, then also effective realization to our company would be similar?
See, this is a very Excel sheet game. We always, each time we are buying raw material, we have to keep our Excel sheets ready to see that at which price of which raw material the margins are better. It is very, very volatile, keeps fluctuating. So depending on at that very day, that very moment, the price of raw material, we decide whether we want to shift the plant to rice or to maize. The plants are flexible.
One question: why the realization is different for both for the ethanol if it is processed through different grains?
Because the starch content is different in both. They're different grains. The starch content is different.
Okay, so understood. One last question: you have given the revenue target for all the three segments in your presentation. So, what can be a steady state margin? I know it's a commodity business, so difficult to say, or depending on raw material cost. But if everything is as per your expectation, then what can be the targeted margin over the next 2-3 years?
See, definitely, as I've been saying, we are hoping that the worst is behind us and looking at a U-turn recovery from here. So, well, we do hope that we should be looking at 8 to 10% EBIT margins in the coming years.
Understood. Thanks a lot.
But again, I would like to reiterate that these are forward-looking statements, and we always hope for the best.
Understood.
But nothing can be assured. These are not assuring statements. These are just forward-looking statements.
Sure.
Yeah, Jasmine, go ahead with the question. Yeah, Jasmine, go ahead with your question. Any more questions from the participants?
Yeah, hi. Just one more question from my side. Uh, what do you expect a steady state kind of revenue for FY'25? Just a ballpark number from other businesses. Like it's generally, I'm seeing it's around range of 850 to 900 crores. Can we expect the same going forward as well from mineral processing and grain processing business?
Yes, I think 900 crores is a steady revenue contribution from the grain processing segment, and we have not taken any further capex in this segment. So until that happens, and the plant's already running at maximum capacity utilizations, not expecting a major jump in this segment, but we should be able to maintain these revenues.
Okay. And I'm seeing there is a decline in the EBITDA margin from FY'22 to 23 and 24. So is there any specific reason for that?
It's been because of the raw material prices, which got affected due to the outburst of ethanol industry.
Okay.
Both the segments share the same raw material, which is maize and rice. And with so many plants, more than 100 plants, which came up in the last 2 years, the whole demand of maize and rice went over the roof, and that also impacted our grain processing segment.
Okay. And you might have an idea about how the harvest has been going on for maize and in the coming quarters. So any outlook on that?
I hear there is maize, there is a bumper crop on the maize.
Okay.
So I'm really hopeful that that has a positive impact on the industry.
So there can be a price stability, right? If there's a bumper.
Yes, I hear that. But you see, it's an agro commodity. It is subject to many, many factors. We know that there has been a big jump in the sowing of maize seeds because of a lot of hard work which has been done by the industry and the government in educating farmers towards maize cultivation. In fact, we also as a company has done a lot of education, a lot of work in educating the farmers to grow maize in catchment areas. So we are aware that there has been a big jump in sowing maize seeds by the farmers. But as it is an agro product and it is subject to many other factors, so so far it's the news is that the crop is there's a big jump in the crop, but time will tell.
Okay. Okay. Understood. Thank you. Thank you and all the best. Thank you so much.
Thank you.
Yeah, Viraz, I have one more question. Can I ask?
Yes, please go ahead.
Yeah. Ma'am, in this maize and rice processing, the product is starch and starch derivative. Whether price over there is also very fluctuating.
See, the price is fluctuating, but it is also it is subject to many market conditions and external factors. So we don't have contracts. It is like the way we have in ethanol sector. This is prices are dynamic and they keep changing every day, every week, every month. But you see, when the raw material price goes up, like the way it has gone up in these last 2 years, there is only so much that we can push to the end customer. So our customer base includes likes of Asian Paints, Dabur, Patanjali, Unilever. So if I talk about our product sorbitol, beyond a certain price, the product becomes unviable to the end customer, and it will start importing sorbitol from maybe China. So there's only so much push because in today's date, maize is as compared to any other country in the world. What has happened to maize in these 2 years because the outburst of ethanol industry has not happened in any other country. Today, maize is most expensive here. See, our factories are we are producing sorbitol from the past 25 years and servicing these customers. For 1 or 2 years, if we are having a decline in EBIT margins, we cannot not service them. We cannot close our plants. We still have to buy raw material, still produce, still sell, even if it is at a loss. Because we know these are just short-term factors and we have to look at longer games. Same is for starch. Yeah, same is for starch.
What is the alternate to them? If your cost is gone up for starch, you will end up charging a higher amount, or they will have alternate source.
Yes, for starch also they have alternate source. Like today, if I'm getting raw material at say 25 rupees and my starch should be priced at 38 rupees minimum a kg, then beyond 36, 37, 38 rupees, then the paper industry, which is the end customer for starch, will shift to alternates like glycerine. Because see, these are all raw materials and they're all fillers. There is always an alternate for them. Okay. The price goes up to something, then they...
Okay, you supply starch only to paper industry, ma'am? Hello?
We also industry, but their customers are the paper industry.
Okay, and for the other customer, Asian Paints, Dabur, and Patanjali, you supply the other products.
We plus supply sorbitol to them.
Okay, understood. And for ethanol, there is no realization risk. That is government fixed tender, right?
Yes, that is fixed by the government.
Okay. And now, how is the working capital works in these two major businesses, ethanol and grain processing?
Yes, Rajeshji, would you like to take this question on working capital?
Can you repeat? I'm not able to. What is your question?
Sir, in working capital cycle is how long in both the segments?
Working capital, see, as in case of ethanol, but there is a supply is basically to OMCs. We receive payment in 21 to 25 days time. So there is hardly any requirement of it's just assured return. So 25, 30 days cycle is there for the ethanol, and in other cases also 30 to 45 days working capital cycle.
Okay. And sir, the ethanol plant, when we put up, what was the projected IRR of that project or payback period, whatever you would have calculated, sir?
Payback periods, it depends on there are two plants. One was in Assam, one was in Madhya Pradesh. So Madhya Pradesh was a 500 KLPD plant, and this you were talking about the payback period. is around 5 years in that particular in case of MP. But in case of similar is the Assam also, 5 to 6 years. The payback is 3 to 4 years, but depending upon the pricing and as you said, as you already Aditi is telling you, commodity we are dealing into commodities and commodity pricing is very fluctuating for last 1.5 2 years. So profitability is affected because of that. But we always go for a payback period of around 3 to 5 years. Sir.
Understood, sir. Understood. Thank you.
If can you share the incentives that is provided by the Assam government?
The incentives are there, yes, by Assam government. We have already received PLI for 2 rupees for in case of any production which we do for in case of ethanol from Assam government. Then there are need is there any idea which is a central government policy as well as there is a Assam government policy which is there for incentives. So there are incentives are available from the state as well as the central government in case of Assam.
Sure.
So I'd just like to add to that, all put together, I mean, from the state as well as central government, we have all put together about incentives about 3.5 rupees per litre, which is including 2 rupees PLI and other state incentives, about 3.5 rupees per litre.
Sure.
Hi, Viraj, can I ask
Participants,
one question?
yeah, please go ahead.
Yeah, so these 3.5 incentive that will be available only on the production from Assam, right?
Yeah, that will be available on production from Assam only.
Okay, okay. And is there any ballpark number of how much, just a ballpark number of how much the impact of FCI rice price cut on our, margins, or just how much it would reduce an inventory cost or raw material cost, FCI price cut?
See, I already answered that question quite a few times.
Already we have answered. So
That
Okay.
there will there's a drop in raw material and it will have a positive impact. I think we've answered that question many times.
Okay, okay.
Yeah.
So if there are no more questions,
Viraj, I had
yeah,
one
Samir.
question.
Yes, Samir, go ahead.
Yeah, hi Aditi. Yeah, I just wanted to understand about the export scenario in the coming quarters.
Sure. So, see, we export sorbitol to over 40 countries. And we have a revenue of about 100 crores coming. So I expect revenue to be stable only, not much deviation on the upper or the lower side. So I think we will continue to maintain that kind of revenue from sorbitol exports.
So it would be constant, like going in the
I
coming
don't see much
quarters.
deviation, yeah, on that.
Understood.
So
Got it.
as I informed that our plants in the grain processing, our plants are running at almost complete capacity utilization. So until we are increasing the capacity, we don't see any jump in revenue on that front.
And right now, what would be the current capacity utilization?
For grain processing segment?
Yes, yes.
Yeah, as I informed, almost on a 80% capacity utilizations, the plants are running.
And it would remain constant in the coming quarter as well.
Yes, that will remain constant. This is
Got
almost,
it.
running 20 days in a year. So yeah, almost there.
Understood.
Almost full capacity.
Got it. Thank you.
Yeah, thank you. Thank you, everyone. I would like to hand over the floor to Aditi ma'am for any closing remarks. And thank you, everyone, for your participation.
Yeah, thanks, Viraj. Thanks to Mama for organizing this call for us. And I would like to thank all the people here for joining this call and taking interest in the company. The company has there has been a big shift in dynamics for Gulshan Polyols Ltd in the last 2-3 years. We have scaled the company in almost 5 times. If I see my last 4-year graph from 600 crores to now looking at more than 2,000 crore revenue. So a big jump we have seen. We have changed the dynamics of the company. And you see, last 2 years, the company has worked aggressively on execution of the capex. And I would like to inform you all proudly that we have completed all capex in the due time and the due amount that was reported. So there has been 100% success on the execution part of the capex. And the plants are now running at full capacity, almost at 70% capacities. Next 1 year will be, our full focus will be on how to improve the operations and the efficiency in operations and improve the margins. So though there has been a sharp rise in the revenue of the company last 1 year, now coming years, we will see improvement in the bottom line. That's how I'd like to close this.
Thank you, ma'am, for your time.
My pleasure. Thank you, everyone.
Thank you.
Thank you.